Right, good morning, everyone. Just send me a good morning if you have started receiving my videos. All right. So let's start off, friends. Friends, unfortunately, I made two channels. Actually, one was supposed to be scheduled for 7:30, another one was for 11 o'clock. But the timings in both has come the same. So I'm going live here. I hope there is nobody else live on the other live channel which was kept in the other place. All right. That is point number one. And friends, point number two, unfortunately, I have left my charger in the office and I've brought some other charger instead of that. So I have a 50% charge in my laptop right now. Let's hope that should be enough for the morning session. By chance, my battery goes low because the video streaming and everything is happening online. If the battery goes low, we might end up the morning schedule a little early. And after 1.5 hours, we'll start the next session by which time I will reach my office and I will set up over there. All right, friends, I repeat once again, please, I hope you have understood. Unfortunately, I took a different laptop charger and have come home. So if my battery gets over, the morning session from 7:30 to 9:30 might get over a little early. And subsequently, what we will do, normally I stop at 9:30, I start at 11 o'clock, right? So this time what I might end up doing is, let's say it gets over at 8:30. We will start by 10 o'clock from my office once again. All right, friends? Okay. Shall we now do this one question which is pending on free cash flow to equity? Everyone, please take this question and read through this question. This is a question on free cash flow to equity, after which we'll start off with international finance. So let's do it a bit quickly. Friends, let me just quickly recap the concept and explain to you what the concept was. What we learned in the concept was, if we are talking about free cash flow to equity, one minute. There are two parts coming over here. One is the cash flow and the other one is something called as the discount factor. The discount factor would be what? KE. Cash flow, I give you a formula, profit after tax plus depreciation attributable to equity holders minus capex attributable minus additional working capital attributable. All right. So I will just explain that part to you. What is the meaning of this word attributable? All right. Friends, let's take this question and do this. In this table, we don't need basic data because all the data is already given in the table format. But now what I will do is, from this table, I will find out the hidden information. Have they given the equity capital and the par value? From this, can I find out the number of shares? So working note number one would be analysis. Point number A, what I'll find out will be the number of shares. So the number of shares over here will turn out to be 1300 divided by 40. Do we get the answer as 32.5 crores? All right. Once you get this first hidden information, they have given the profit as 290 crore. So can I find out my earnings per share? That will be 290 crore divided by 32.5. We'll get the answer as 8.92 rupees per share. All right, friends. The next part, what they have given over here is, they have given the debt ratio is 27%. If debt ratio is 27%, can I say the equity ratio will turn out to be how much percentage over there? it will be 73 percentage. Growth is given, beta RF RM is given. From this, can I find out KE now? So KE will be equal to RF plus beta into RM minus RF, where RF will turn out to be 8.7 plus 0.1 into 10.3 minus 8.7. All right. So I'll get the answer over here as 8.86 percentage. Then they have given capex per share, depreciation per share, etc. Not relevant right now. Can you please write down till here in your books, friends? All right, friends. So I told you we are actually having two parts. One is called KE and the other one is called as the free cash flow to equity. Here we have got the KE. Now I need to find out the free cash flow to equity. All right. So I'll write down the next working note heading, free cash flow to equity. Okay. Point number A, I'll write down profit after tax plus point number B will be what? Depreciation attributable to equity holders less capex attributable to equity holder. Next point will be less additional working capital attributable to equity holder. Okay. Once I do this, what will I get over here? Free cash flow to equity. I will now show you how this calculation actually takes place. What is the profit after tax that we got over here? Have I got the answer as 8.92 rupees per share? Now tell me, how much is the depreciation that is mentioned in the question? Is it 39? Friends, 39 is total depreciation per share. Ideally speaking, if a company is having some debt funding and equity funding is only 73%. So only 39 into 73% will be attributable to equity holder. How much is 39 into 73%? Do I get the answer as 27.01? Similarly, if they have made a total capex of 47 per share, 47 per share is total capex. This is funded by both equity as well as debt. So the portion attributable to equity will be only 47 into 73%, which is 34.31. And if the working capital is 3.45, of that 3.45, only 73% is attributable to equity holders. That turns out to be 2.51. All right. So if I do like this, the free cash flow to equity, what I will get over here will be 8.92 plus 27.01 minus 34.31 minus 2.1 minute. 8.92 plus 27.01 minus 34.31. I think I've made some mistake somewhere. 1 minute. Equity ratio is right. Capex is 47. Depreciation is 39. There is some mistake, friends. 1 minute. 4.35. 2.51 and 290 divided by 8.92, that's also right. So it will be 8.92 plus 27.01 minus 34.31. Friends, just give me a minute. There is some calculation mistake that's happening over here. $28.47 is it? Depreciation is 39. Am I right? 59 into 0.73 is 28.47. Okay, so I took it by mistake as, okay, now it is correct. 8.92 plus 28.47 minus 34.31 minus 2.51. So I'll get the answer as 0.57. Can you please write down till here in your books, friends? Yes, that was an arithmetic error when I was doing in the calculator. Can you please write down till here now? Alright friends, now I'll go to the last part. Working note number 3, determination of value of a share. Okay. Now friends, here they have only given one cash flow. Am I right? So we are assuming that this cash flow will be going on towards perpetuity. That's one of the assumptions. It is assumed that the profit will grow at, they have given the growth rate in the question, will grow at 8% towards perpetuity. This is point number 1. All right. Second point, what we need to understand is that this 0.57, is it cash flow at the end of year 1 or cash flow at the end of year 0? Friends, in the question, they have used the word profit of the company. When they use the word profit of the company, does it mean actual profit or expected profit? It means actual profit. Actual profit comes only from the audited financial statements. Hence, this cash flow is at the end of year 0. So the next one, what I'm going to do here is I'll write down, since the word profit is used, it is inferred that it's actual profit from audited financial statements. Hence, it is cash flow at the end of year 0. Can you please write down till here in your books, friends? Alright friends, if you have put up till here in your books, can I now go to the next page? So we know the formula, P0 is equal to D1 divided by KE minus G. Here it will be P0 is equal to free cash flow of equity at the end of year 1 divided by KE minus G. Alright, so it will be P0 is equal to FCF0, that is the cash flow given over here, into 1 plus G will give you FCFE for year 1 divided by KE minus G. That will be 0.57 into 1 plus 8% is the growth divided by, what is the KE that we got? I think it was 8.86. 8.86% minus 8%. Shall we do it together now? We'll get the answer as 71.58 rupees per share. Alright, this is the price that we will be getting. Can you please put up till here in your books now, friends? Once you're done, please message and let me know that you're done. Because after this, we'll go to the next chapter, International Finance. Okay, Megha, you have a doubt that how do we know that this question has to be solved using FCFE method? Okay, I will explain that part to you. First of all, they have only asked calculate the value of a share. Am I right? My first day basics class, if you have attended, you will know value of any asset is present value of future cash flows, whichever chapter it is. All right. And here for future cash flows, what is the future cash flows given? Only the profit is what we can find out. Am I right? And we know they have given the long run growth rate, means that growth rate is going towards perpetuity. So we have to use the perpetuity formula, and that's exactly what I have used. So that is where I told you basics are very important. All right. Value of any asset is present value of future cash flows that the asset can generate. This is rule applicable to all the chapters. So exam, whatever comes, if they ask for value of a share, same thing will apply. Value of a bond, same thing will apply. Or you talk about even value of options also, same thing will apply. All right. Okay, friends. So we are done with this question also. Now let us go to the next chapter, International Finance. All right. Siddesh, P0 means price today. No, 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 no. P0 is always a terminology used for what should be the price today. Price today means what should be the market price today. All right. Okay, okay. Let's get to the chapter of international finance. Friends, now the next 30 minutes are very crucial. I'm going to go on the basics. So please concentrate properly, because if the base is strong, this chapter is very easy. Let us start with concept number one. Everyone write down currency versus commodity. Sai Reddy, your question is right. I'll just explain that part also. You are asking that depreciation is given per share. Am I right? When depreciation is given per share, what is the formula for depreciation per share? It is total depreciation divided by number of share. Have you ever heard a formula called as total depreciation attributable only to equity holder divided by number of share? No, that you are learning it right now, correct? So once you get this, to get the equity portion, what we do simply is we multiply with 73%. All right. Okay. Everyone now write down. One more, Komati RSC Kumar, you are asking that capex per share is only given, which is attributable to equity shareholders. No, capex is the investment made. Once I make an investment, the funding can come either from equity holders, or the funding can also come from debt holders also, right? I can take a loan and construct a building, nothing wrong in that. So my debt equity ratio will tell me that if I have 100 rupees of investment made, 73 is funded by equity holders, 27 is funded by debt holders. All right. Okay. Now, currency versus commodity. This is one of the most important concepts of international finance. Friends, let us assume the exchange rate right now in India is turning out to be 50 rupees per dollar. Okay. If it is 50 rupees per dollar, here there are two things are there. One is rupee and the other one is dollar. One is called as the currency and the other one is called as the commodity. Now tell me in this case, what is the currency and what is the commodity? Friends, here rupee will be the currency and dollar will be the commodity. Or friends, the rule is very, very simple. The numerator, whatever is the numerator, here it is rupee per dollar, is always the currency. All right. And denominator is always the commodity. Can you please write down this in your books, friends? This is the most important rule according to me. Numerator is always the currency, denominator is always the commodity. All right. Okay, Sri Lakshmi, you have a good doubt. You're asking, how do we know you have to do it using free cash flow to equity method and not free cash flow method? All right. What is the difference between these two methods? Free cash flow method, cash flow should be considered before interest. Am I right? In this question, have they anywhere given details about interest? No. So if interest is not given, is it possible for me to find out the cash flow before interest? Point number one. Second thing, I should use WACC, for which cost of debt and weight of debt also should be given. Is that given in this question? It is not given. Hence, there is no other methodology other than free cash flow to equity method that we can use. I hope you are clear with this part now. All right. Now friends, if you have written down till here, I will show you a few things how you get confused in the exam. All right. I will give you a quote. Okay. You tell me what is the currency and what is the commodity. All right. I first told you 50 rupees per dollar. Am I right? So you told rupee is the currency, dollar is the commodity. Am I right? Second one, let us say the quote is like this: 1 USD is equal to INR 50. All right. What is the currency and what is the commodity? Rupee will be the currency, and again, what will happen? Dollar will be the commodity. Okay. Now, these two things I'm explaining to you, assuming that I am in India. Now, suppose I am in USA and my exchange rate is 50 rupees per dollar. Now, tell me what is the currency and what is the commodity? Here also, friends, rupee is the currency, dollar is the commodity. You really don't have to worry whether you are in India or whether you are in USA. Whatever is the numerator is the currency, whatever is the denominator is the commodity. So let's forget this differentiation. I am India, that fellow is US. Realize that we belong to planet Earth. All right. So just keep this one rule in mind. Wherever it is you belong to planet Earth, numerator is the currency, denominator is the commodity. Now I'll ask you one more question. Okay. Suppose you are in USA. Exchange rate is 0.02 dollar bar rupee. What is the currency? What is the commodity now? Again, you belong to planet Earth. Dollar will be now the currency. Rupee will be now the commodity. Suppose you are in India and the quote is again 0.02 dollar bar rupee. Again the same rule. Dollar is the currency. Rupee is the commodity. Can you write down this in your books, friends? All right, friends. Now, we as Indians always have a problem in, seeing the other way around. Now, friends, just let me take a simple example. 50 rupee per dollar, you are very, very comfortable. Okay. Now, tell me, what are you going to eat for your breakfast today? Assume you are going to eat a masala dosa, and let's say the price of masala dosa is 50. Can we not put it as 50 rupees per masala dosa? If I write down like this, you are very comfortable. If I ask you what is the rupee, what is the currency, what is the commodity, you will definitely tell me rupee is the currency, masala dosa is the commodity. All right. But when you see an exchange rate called 0.02 dollar bar rupee, you feel very much uncomfortable. You get restless. Hey, how can rupee come down? I am from India. Mera Bharat Mahan. Rupee should go on the top. Then in exam hall, what you people sit and do is, you sit and do 1 divided by and you try changing the entire thing topsy-turvy. Like that, you make your own life miserable because half the time goes in converting. And after that, your answer will also go wrong. So friends, now onwards in the exam, if you see something like this, if you are getting a little restless about what is the currency, what is the commodity, just imagine this is 0.02 dollar per masala dosa. Now you tell me what is the currency, what is the commodity. Now you are sure dollar is the currency, masala dosa is the commodity. So keep this imagination in your mind so that you don't get confused. What is the currency, what is the commodity. Can you write down this in your books now? Akshat, all these videos are available on my website, and not only this, there are videos beyond this also which are available on my website. For example, I haven't done mutual funds here. Videos are there on my website. mergers. Oh God, friends, bad news. My battery is running low. Can you please write down till here in your books, friends? Friends, is it okay if we take a break right away now and start by 9:30 a.m.? Unfortunately, my laptop charger I have left it in my office and I've come off over here. Is it okay with all of you? Can you please chat and let me know? I don't have a choice now actually. My charge is gone of my laptop because it's video streaming. It's consuming a lot of battery. So we can have a session from 9:30 to 11:30. We can take a break and then we can again do 12 o'clock to 2 o'clock. I'm sorry, friends, for this inconvenience caused to you because of one small mistake from my side. Let's start back at 9:30 a.m. friends. We will do international finance in a smooth flow at 9:30 a.m. I'll come live again. Really sorry for the inconvenience that I have caused you today. We will get back at 9:30 a.m. Thank you so much, friends. Thanks a lot.